What is going on, everybody? I got a new video for you today. We're going to go over the Fibonacci retracement tools in TradingView. So you've probably seen people draw Fibonacci retracements that look something like this, and you may understand or you may not. So a lot of people have trouble understanding what these lines are and what these numbers mean and represent, and we'll get into that in a second. Another thing a lot of people ask is, do you draw it from the bottom to the top like I just did, or do you draw it from the top to the bottom like this? And I'll kind of give you guys my thoughts on the differences between these two, and they're really not that different. They're just, in my opinion, you're using them for different market conditions, and you can kind of use them in unison and give you guys an even better idea of where a good trade may be lying. Now, another thing that I want to note on this video before we dive a little deeper is Fibonacci is a great tool. This is a really great tool that I like to use a lot, but I use it in conjunction with a lot of other indicators. I like to use the RSI. I like to use the MACD. I like to use Elliott wave theory a lot. And then another thing is I really think that everybody should be looking at past price action, because the structure of the previous price action leaves a lot of clues onto what will happen in the future. So look back and project forward. And past results don't necessarily mean future results, but they can give you an idea of how a market may or may not play out. And one of the examples here is this line here. So we look at this congestion right before we reached our all-time high in Bitcoin. And once we fell off this minor cliff here, look where that congestion is lying again. And if we look back even further at our Fibonacci, where we're testing is this 0.236 line. So that's why I say look at past results. Same with here. We're testing the same line in multiple market conditions here. So what I want to get into is, what are these numbers? What is this actually doing? So basically these numbers are just percentages. We as traders convert these to percentages. So this is 23.6%, 38.2%, 50%, 61.8%, 78.6%, and 100% is at the bottom when you're drawing it this way. So in a bull market, I like to draw it this way. And I also like to project it forward a little bit so you can see where these lines may end up. So if we look at it like this, we can draw another one down here to our high, but I like to project it out so we can see where these lines are in the future. So if you see me doing that, just take note of that. Now, where these numbers come from is from something called the Fibonacci sequence. So this is all math and it's kind of boring, so I'm not going to get into it too much, but basically it's characterized by the fact that every number after the first two are the sum of the two preceding numbers. So 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 plus 5 is 13, and so on and so forth to infinity. Now you're probably saying, well, that doesn't add up to these numbers. So basically, these are just ratios of numbers in the Fibonacci sequence. So if we go to this page, I gave an example, but you can use any number in the Fibonacci sequence. So I chose two separate examples, the 2 and the 3. You basically take any number, you divide it by the next number in the sequence, and then you divide it again by the 2 numbers later in the sequence, and then 3 numbers later in the sequence. So 2 divided by 3 is 0.667, 2 divided by 5 is 0.4, 2 divided by 8 is 0.25. As you can see, these numbers are, as you go further and further down in the Fibonacci sequence, you'll see that these numbers get closer to these ratios that we see in TradingView. So we did it with 3 divided by 5, which is the next number over, 3 divided by 8, which is the next number, 2 numbers over, then 3 divided by 13, which is 3 numbers over. And as you can see, we did get closer to these ratios. So that's all I'm going to get into for that. That's just how they are derived. Some of the other numbers on screen, they're also just division in the Fibonacci sequence. So if you're curious. Anyway, so how I use Fibonacci. What I'm going to do is I'm going to go back in time to when we were at this $20,000 mark for Bitcoin. And I'm going to give you guys a kind of a play-by-play of how I would treat it when I am in this situation. So we drew our Fibonacci from the start, and I generally draw it from the start of our one wave when we're doing Elliott wave theory, I didn't actually draw that, but somewhere in this region is where I would probably have drawn my my one wave. So I will look here. So from the low to the high, I drew it out. And as you can see, if we're sitting at 20,000, we touched this, that's where the top was, and then we're moving forward in time, and we're seeing this price action moving, and we're sitting in the middle of this Elliott level, or this fib level. And this is very important to realize, because what basically these fib lines are doing is they're giving you a percentage of how far this price action is dropping. Okay, so if we get down to this fib line, we have dropped from our all-time high 23.6%. And so the further down you go, the more buyers tend to be, right? The more buyers there tend to be. And the 0.618 ratio is a ratio that a lot of people just say everybody should just buy at the 0.618 ratio. And that's something I'll get into in a little bit. I don't necessarily think that is always the case, and it's definitely not always the case. But anyway, so you look at these, and when I'm trading in this region, I don't want to get stuck in the reversal of a market trend, right? So, or a market reversal. So I don't like to trade up in these top two. I don't like to look for this when we've hit all-time highs. I like to look to take my profits. I probably, I was buying back in this region, so I wouldn't want to buy again up here and cost average myself up. I want to cost average down if I can. So that's why people say to look at this 0.618, because that's a 61.8% drop. So as we keep going, we see that we look in previous price structure, we see that there was some congestion here, and we're seeing the same exact thing here. But what's very consistent here is this line. We're testing this line again. We're testing this fib line, and we keep going, and finally we cut through it like butter. And then we cut through another one like butter, 38. And then we go all the way down and we break through, we wick right through the 50% line. So that's a huge drop of 50% price decrease here. And we're able to see these as good buying opportunities. So if you would have purchased at this 50% fib level, you would have been in a very good spot over the next coming few days, right? Like, look at this. Then we launch back up. But the thing that you're noticing here is you're seeing congestion at each fib level. And like right here, you're seeing a lot of consolidation and kind of which way is the market going to go? Is it going to go up or is it going to go down? And as you can see here, it launched up. And then we tested this upper fib level, this 0.236, and then we decreased and came down and tested this 38.2 line again. And then we cut through that. And as you can see, that's just one of the examples I wanted to give you on how there is support and resistance lines that are inherently drawn with this fib retracement tool. Now, this is the tool that I like to use for a bull market. I like to use this from bottom to top in a bull market. Now, when we see something like this, let me delete this. When we see something like we saw here at our bottom, when this 0.618 is breached, that to me and to a lot of other traders signals a trend reversal. So this trend right here, this big market uptick, this bull market that we were in for a while, was intact to me all the way until we got to this 0.618 line, and we breached through it in a very, very bearish manner here, with a lot of bearish volume and a lot of FUD and all this bad news coming out, and then we just continued downward. So to me, this whole region from here back was still the bull market. But once we breached through this 0.618, as you can see, this was healthy support here. We got a ton of support, ton of very bullish volume here. We jumped back up through the 0.5 fib level, and then we came down, sort of flirted with it again, came back down to the 0.6, and then we came down again and we broke through it. And this would be where my, stop losses would have been. And this is where the market reverses. So if that makes sense to you. So now that we've broken through this is what I like to do. I like to use this fib retracement from top to bottom. And basically it's the same idea, okay? Except your one is now at the top up here, and your 0.786, it's basically inverted, right? So you're basically looking for this to be your bottom, and where's the price action going to go from here? Are we going to be able to retest this 0.618 line and get back into that bullish market trend? And that's where I look for like long-term signals. Like, okay, is this market still in a bear market or still in a bull market? I look at that 0.618 line, and clearly we haven't gotten close to it since we bottomed out. So I am not too confident that we are out of this bear trend just yet. And especially if you look at the coin market cap with the volume and everything, there's a lot of different indicators that we like to look at, but that's one way I like to look at this. So for a long-term trend, now we can go back and we can use this bullish market one, and we can kind of see similarities in here. Let me delete this one. And you can still sort of use this, but we're definitively right now below this 0.618. So the next buying opportunity for me is going to be back here at this 0.786 line. And as you can see, previous congestion is a good spot for support in the future. And so you may want to ladder in this region here if you're using this fib retracement tool. And then, you know, if you bought in here, then maybe you want to put some sell orders up in here and maybe sell, you know, 0.25% of your, or 25% of your portfolio right up in here, and then sell another 25% up in here. And you just want to ladder in and ladder out to help you with your cost averaging. So anyway, and that also helps with your bankroll management and everything. So basically, that is how I use the fib retracements. And then you can go on a more minor scale, and you can even look at these more recent trends. And I've used this in the past where you can see where this was our top, our high, and you know, we can even go down here. We'll do our first one. So let me zoom in and I will explain. So as you can see, from bottom to top in a micro trend, this is more micro than we were just looking, we can see that we retraced down to the 0.382 line. Okay, so that's something to remember, the 0.382 line. Now what happened up in here? Look where we're retracing to, the 0.382 line. Okay, so that is a good indication to me on using this Fibonacci tool. Okay, so we touched up here at our high, then we touched our 0.382. So on our next market run, we might see that same 0.382 line get triggered, and that would be a good buying opportunity. It would have been a great buying opportunity because you would have bought down here around 9,400, and you would have ended up probably selling either at this next fib level or even up in this fib level, and you would have made a nice profit. So that's one way to look at it on a micro scale. And right now it is, let me look at this. Let's look at it in real time. So right now we are testing the 50%. And I think a good next test to kind of see where we're at is to look at this 0.618 ratio. And where have we seen it hit that in this market cycle? We haven't seen it yet. And so that's something you want to look at. You want to look for where are you in real time? What fib level are you at? And look at the other indications. Where is there congestion? Look at the past. Look at all this congestion at 0.618. This might be a very solid support line in the future. And so if we continue on this downward trend towards this 8,000 mark, maybe 8,200 might be a very good buying opportunity. And I'm not certain. This is only one tool that I use. So you do want to use other tools, the RSI. Where are we at on the RSI, et cetera, et cetera. So where are we at on our Elliott waves? And our Elliott wave has completely broken down since the top here. We're definitely in a big corrective Elliott wave correction from this 5 wave that ended here. So that is my take on Fibonacci retracements. If you like the video, give me a thumbs up. Subscribe to the channel if you want more information. And I'd love to hear in the comments how you guys use the fib retracements. So I'll catch you guys in the next one.